Good morning, ladies and gentlemen. We're at Charts and News today, episode 14. Today we're going to look at the 10-year yield and why I think it's going to crater, meaning you can go long on bonds and make a lot of money. Natural gas and the potential for huge profits still to this day. We're going to look at Bitcoin. We rarely look at crypto, but we're going to look at crypto today. We're going to look at the dollar and how it is facing a death cross and what that means for markets. Be sure to like, subscribe, and share the video. Subscription is necessary, and I promise you it'll be the best move you make in your life. Well, let's get into this, guys. We got the 10-year yield in front of us right now. Keep in mind, when this goes down, the bond market goes up. When this goes up, the bond market goes down. And I'm going to explain why I think the yield's going to go down, meaning you guys can go long on bonds. Obviously not financial advice. I'm not trying to get in trouble here, but just listen to my objective analysis. We have red signal here, short MACD, cool. Or no, but we do have a short MACD, but that was QQE signal. Sorry, I apologize. This red line over here, this horizontal red line, is the 50% retracement if you look at the rally from August to October. 50% retracements are very important. That's actually why it failed over here and formed a little double bottom. But it's on its way down now. We got a short there. We got a red MACD. What else do we have? Well, let's look at the weekly chart and see what we have. Bearish divergence. I'll show you right now. Okay. Let's go here. Here. There you go. Price makes a higher high, but the RSI undoubtedly makes a lower low. With a red MACD on the weekly as well, and a short signal. This looks like a pretty good trade to me, guys. Maybe hold it for like a week or two. We'll see what happens. What I think is going to be a point of resistance, or support, I should say, is either this red line, which is still good profits if you ask me, but this 200-day moving average is also going to be a point of resistance. Or support. Sorry, guys. Wow. But, okay, you might be asking, but what if we capitulate, So I don't know how new you or how experienced of traders you guys are, but usually, and this is crazy, when we capitulate, bonds go up a lot, and that's because the yield curve corrects itself. The yields go down like crazy, and like you guys got to realize, people say like, oh, these trillions amount of dollars just disappeared. Like, money doesn't just get money wings and fly to heaven. That's what Gregory Manarino says. It moves to other assets, either the dollar itself or usually it moves to more risk-off assets. And you can see here, this is the 10-year yield still. This is when we capitulated in 2008. The yield went down, guys, meaning bonds went up. Okay, so if you're scared about capitulation, putting your money long bonds is honestly probably a better idea than anything else. And Harry Dent preaches that all the time too. Bonds literally go up when the market crashes. I know this looks like it's going down, but keep in mind, when this goes down, bonds are going up. This is the yield. Cool. So I like long bonds, and I might park some money in there just cause they're so undervalued right now. I mean, 3.56%, that's undervalued, guys. It's been very low, the yield, or the high. Wow, I messed that up a lot. Okay, cool. I'm kind of turning bullish towards stocks, though, guys. This is the NASDAQ. Long signal here. Green MACD here. Bullish divergence. That's fairly bullish to me. I mean, we have to see it break this red line. It's still, this area is going to be important. That's confirmation for me. And plus, this white line is the 30-day moving average. So if it were to break this, it would break that at the same time. And then after that, it's up, and away. But I don't think it's up, and away a lot because it's below the 200-day moving average, meaning I don't see a lot of bias towards bullish moves up. If I had to guess where I see it going, let's see. Let's get the... Nope. There you go. Maybe it goes from here to probably meets the... Yeah, like we could probably see 200-day average probably moves it here. We get like a 7% gain, which is actually good. But I don't like betting bullish on stocks right now because I don't want to get caught holding TQQQ when we capitulate. And I'm a swing trader, guys. I don't trade intraday. I prefer swing trading. It's a lot less time consuming. Just read a chart, find a really good entry, and then hold it for like a week or two. That's my way of trading. But everyone's different. If you want to capitalize on that gain, you definitely can. Another reason I could see the market going up is because Bitcoin looks like it could go up, kind of. Okay? It has my favorite signals. It has a green MACD. It has a long signal here. This is the daily chart, by the way. And it has bullish divergence on the RSI. The only thing I don't like, and why I said kind of, is because the RSI is already pretty high. So if it were to go up, I don't even know how much it would go up. Maybe it touches the top of this candle at around 18.3, but even then that could be a stretch because that's a pretty big gain. So yeah, I'm not crazy on Bitcoin, but a lot of signals are showing me Bitcoin could go up too. So markets could be green for the upcoming future. That's going to depend obviously on the CPI number and all that. We'll see what happens with CPI. That could just destroy everything I'm saying right now. But, okay. So, like, natural gas. We keep looking at natural gas. And I've said maybe last week or a week or two ago that I want this to enter a chop block. And it's kind of doing that. I want it to keep going up and down to the point where this MACD, look, it's starting to roll over, guys. I want it to roll over green. And then we make profits. That's it. And then I get like a long signal here. We already have an oversold RSI with bullish divergence. Going in right now is already tempting enough because the profits are huge, but I'm not going to, okay? Because the RSI could go down here. And I'm not, the risk to reward ratio right now, I'm not going to lie, is pretty tempting, but we got to wait it out. It's all about patience. It's all about discipline. Speaking of which, I might get out of this gold trade just because so I shorted gold in case you forgot. And I'm still around even. I might be down like 0.2% or something. But the point is, I would rather be long bonds right now. Like, I'd rather be betting on the yield going down, to be honest, guys. So I might wait this one out a bit, see what happens with the yields today. Hopefully they go up so I can get it at a better price. And I'm going to show you guys the ticker I use for betting long on bonds. It's called TMF right here. This goes up when the yields go down, but 3 times as much. It's risky. I don't like options, guys. I prefer leverage ETFs. So that's the way I trade. If you want to do options, TLT is a good ticker to use. Buy call options for TLT. And if you think bonds are going down, buy put options for TLT. Anyways, let's hop on into some news, guys. TikTok CEO discusses new regulations with EU leaders as app faces US bans. I mean, there's a lot of controversy going on with TikTok right now. In my humble opinion, they should be banned. I think Instagram should be banned. I think Snapchat should be banned. You have a phone number, guys. You don't need to know what's going on in everyone's life. It's nothing but mentally horrible for you. If these corporations cared about people, which they don't, they only care about profits. None of these apps would exist. They're disgusting. They serve no purpose to humanity but a couple people getting extremely rich. These apps should not exist. What's going on in everyone else's life should not concern you at all. It destroys your attention, destroys your mental health. And that's really not about charts and news, but I wanted to express my opinion on that. So look, guys, we have to talk about the US dollar, though. US dollar on the verge of first death cross since 2020 as rally unravels. Well, it's not even on the verge anymore. It happened. The blue line is the 50-day moving average. The yellow line is the 200-day moving average. And, yeah, it's just, so, like, what does that mean? It shows bearish momentum for the dollar, which kind of goes against everything I kind of just said. Well, not really. It doesn't go against the 10-year yield prediction I have, which is good. But, and it actually, okay, look, it goes for bonds or stocks going up too, but how long can it go down for? If we capitulate, wouldn't the dollar go up? So look, When we capitulated in COVID, the dollar went up like crazy. So, like, I'm thinking my target for if it were to keep going down would be around here. This previous point of support in May 2022, around 101. Because the dollar doesn't move a lot. Like a 2% move in the dollar is pretty significant, guys, right? So we'll keep an eye on that. I don't know how significant that death cross is. I'm not the biggest moving average trader. I kind of just go with the 30-day and that's about it. But if a lot of people use it, it's definitely significant. So let's look at what Goldman Sachs. So yeah, this is what happens when you guys start slowing down. You know, you raise interest rates and the demand for loans has gone down. Goldman Sachs starts massive round of job cuts. This is what's gonna happen, guys. And honestly, I feel bad for the 3,200 staff because I guarantee a good amount of them aren't, or maybe they are, but a good amount of them aren't the greedy ones that, I don't know, are causing this. The executives that collect these fat fees and commissions for selling these garbage securities, which is what causes this, and it caused 2008, and they didn't fix 2008. They just pumped a bunch of money into the system, which is gross. And now we're going to see something worse than 2008. They'll either make it hyperinflationary or deflationary. Either way, guys, I'm sure you've heard it a million times. My best trade right now that I see, probably going to get out of gold and go long on yields. For the same reason, look, we got death cross on the dollar, bearish for the dollar, which is bullish for bonds, which is bearish for the yield. Like, everything's adding up, which is also bullish for stocks, which I just said looks bullish. It's all lined up perfectly, okay? Might have to get out of that gold short, because if all this is adding up like I'm saying it is, that would mean the gold short would be not worth a lot because gold will go up. The only thing is gold looks like it's set to dump, but I don't know. I don't really care. Point is, I'm moving to long bonds. 10-year yield going down. Okay, guys? Let me know what you think. Comment, like, subscribe, share. Get this out there. Get the information out there. Love you guys. Bye.